Today on the CEO Barbecue, I'm in frosty Toronto for PDAC and a couple of other things. I'll take you along for the ride with me on all these things, but the first stop that I'm making is actually at Revival Gold's office. They've got a project in Utah, as well as one in Idaho. There's lots to talk about. They're working toward a PFS and whatnot, but really the good part is I get to see their office, so I get to be a little bit more annoying than usual, and we can talk about costs and whatnot, and you're coming along for the ride with me, so let's go and find Hugh.
For a bullet point summary of this and all other CEO interviews, please go to researchtalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said,
I think you and I last spoke last summer in August, so it's been a while. What have you done for shareholders since?
Well, the share price is up, and I know they're watching that. That's because we've got a good environment for the gold equities generally, but I think our team has delivered. Since the summer, we've completed 115 drill holes at our Mercur project in Utah. We've released results on 86 of those holes. The average grade has come in for the intercepts at 0.66 grams per ton gold, so 10% over resource grade. The average recovery has come in indicating from the cyanide soluble to fire assay ratio strongly in favor of where we've got with our PEA. So average cyanide soluble to fire assay of 78% relative to our recovery in the PEA of 75%. That's a good start. We've got more holes to come out. In fact, we'll be releasing more in early March. The other thing we've been working on, though, is collecting data for our and sample material for our metallurgical test work, which will start this quarter and be completed next quarter. We've got all of our permitting streams figured out for baseline preparation. And in fact, we've just released our timeline and work plans for 2026, including the target objective to be in production with the Mercur Gold project in 2029. So backing up from that, this year has got a lot of work around moving the PFS and the permitting forward.
Yeah, good summary. All talking points that I want to go through. First one, though, that you said your share price is up. It's actually more than doubled, I think, since we last spoke, or about doubled. You're coming up close to a $300 million market cap. Is it making you happy or uneasy? I mean, do you feel like you're getting overvalued, or how do you think about the value?
Yeah, the shocking thing is that, of course, the price of gold and more importantly, the outlook for the price of gold has changed dramatically over the last couple of years. And so as we look at our underlying net asset value relative to our share price, we see a ton of value for investors. Today, trading at 0.16 times underlying net asset value. And it's really important to know that underlying net asset value is only the ounces in our resources that have been put into engineering plans and studies, and that's only about half or less than half the total resource. So in terms of the value equation for investors, I actually think it hasn't been any better than it is today. And part of the reason for that is in a better market environment, venture companies creating new opportunities for gold production enjoy a better access to capital, and that allows us to progress our businesses. And if we're doing it from a higher market cap, our investors are getting better leverage to our gold projects. So this is I don't think there's been a better time to own the developers than now. Yeah, and yeah, happy to speak more about that theme. But as we look at Revival Gold, I think this is only the beginning.
Well, last time we spoke, you did say that you don't want to get caught with your pants down and be taken over prematurely, essentially. Is that still a risk? Is it a bigger risk? And is it still an undesirable option? Like at 300 million, would it be undesirable to you to be taken out, or is the time coming close?
Look, we're always looking at opportunities to take our shareholders to a better place faster. Right? So we have to do our homework on all of these inbounds that we get, and we have to understand what the opportunities around those. And the question for our independent board of directors is really, what is the best alternative for our shareholders? How do we get maximum value for the gold in the ground? And how do we do that most efficiently and most quickly, right? And so we evaluate all of these opportunities. We are vulnerable because if you think about it from a producer context, right? When a producer is trading at 1 times net asset value or even 0.7 times underlying net asset value, they have a ton of reasons to go out and buy something that's trading at 0.16 times net asset value. Even if they pay a premium for those projects and those companies, it's still an accretive transaction for them. And so the devil is in the details around due diligence. And so our approach to making sure that we are always having alternatives in front of us is to have a very active data room, an active corporate development effort led by our VP Corporate Development and IR, Scott Treblecack, and that gives us alternatives.
Mm-hmm. We'll talk about that as well, and what the right point is, and I know we'll talk about PFS and whatnot. Some housekeeping though before that. How much money do you have right now, and what does that money buy you?
18 million cash at the start of this year, and that gets us quite a ways along through the programs this year. We've got about 12,000 meters of exploration and resource definition drilling, another 4,000 meters of geotechnical, hydrological, and condemnation drilling.
Mm-hmm. The fun stuff.
Yeah, the boring stuff, but the necessary stuff. And what's, I'll go back to those parties that are keeping an eye on what we're doing. They're generally very sophisticated, and those things that we are doing on the technical side really resonate with them. So think of those as de-risking steps that open up avenues and alternatives for us. But that work will take us this year to complete. In addition, we're doing all of our baseline study work this year. And we've got metallurgical programs, and we'll advance all the engineering. The total cost of that this year, we're still working those details out as we fine-tune on the programs, but I think the 18 million carries us a good way along the piece. And we have 7 million of warrants coming due in the spring and fall. So we've got some cash coming in from those proceeds. And look, our existing investors are standing behind us, and certainly lots of appetite to continue to back what this team has delivered.
Does the money that you have right now cover your payment to Barrick as well as G&A and other non-exploration costs as well?
It does. It does. We've got the Barrick payment, $5 million US, coming up in April as we complete that transaction, and those funds, those 18 million Canadian, will cover that.
Right. Well, talk to me about raising capital. I mean, you kind of alluded to it just before. How do you see that happening? Is it mostly retail? Are you thinking Dundee and the other guys are like, yeah, how do you see raising capital next time?
Yeah, so we do have supportive shareholders, not just Dundee, but EMR Capital, Conwave Gold 2000 out of Switzerland, Donald Smith Asset Management in New York. So we've got a really supportive core shareholder base that are well-heeled and have had a lot of success in the market. So lots of support there. Both Dundee and EMR Capital have rights to maintain their 6% and 12% respectively positions. So and we've seen them step up on the financings to exercise those rights. So I think we're in good shape here. We haven't really narrowed in on where we want to go to on the next step. There's a few parties that are circling around that we like in terms of their potential value add as we build the company. So we'll continue to progress discussions with those groups and with our existing shareholders. And as our plans firm up, and as I think it makes sense with the broader market activities, we've still got results to get out. For example, we'll put the next slug of money to work.
I do want to know more about that, but people listening should also want to know more about Tara Hutton, who doesn't only make the invisible investable, but they've made this video free of YouTube ads by sponsoring it. Tara Hutton is built for the people who are tired of going through boring PowerPoint decks and geological jargon when they're analyzing mining companies. It's a digital platform where the data, the story, and the context sit together so mining investors can use visuals to understand the why without needing a geology degree or a week off work. And if you're on the company side, it's a great way to present your project like a serious operator with everything investors keep asking for in one place. Contact them at terahutton.io.
Interesting note on potential strategics. Can I say that? Are you thinking straight equity, or do you expect having to do a project level deal before the PFS?
Yeah, so we have had expressions of interest on the streaming and the royalty side, the convert side, some of these non-equity alternatives. Our preference is to push all of that to the point at which we're looking at doing a construction financing package. That'll be next year's exercise. So as soon as we're finished the PFS, we'll start a process with the various banks, PE firms, and credit-like lenders to put together a package. And we've got Scott Treblecock, our CFO, Lisa Ross, geared up to look after that process and make sure we get the best outcome in terms of financing, a domestic U.S. gold project with a relatively simple footprint and operational degree of complexity. As well as the fact that it's a modest amount of capital, $208 million in the PEA. That number may move around as we perfect the project scope. For example, one of the things we're looking at is the possibility to move more ounces forward in the timeline and work with a bigger scope of production. That would take our capital up. There are other things we can do potentially that would lower our capital. For example, the sequence at which we develop the projects. We've got Main Mercur, South Mercur. We've got some road development to do, and if we organize that differently, that may result in a lower capital. So there'll be some trade-offs as we go here, and but even at $208 million or something higher than that, it's a modest number, and it's the type of number that's just big enough that it'll appeal to some of the more higher quality lenders out there. And so we want to be starting that process next year, and we'll go and put together a package, and there'll probably be a few pieces to it to minimize the overall cost of financing.
But you still think there's room for a royalty or a stream, even though, because I think Barrick's going to keep a royalty?
Barrick has a royalty. There's a lot of margin in this project, right? $1,400 ASEC, and that's including royalties, of course. So lots of margin.
Yeah, good.
And one never likes to give a royalty away, but I'll tell you why the royalty alternative is of interest. It's of interest because the royalty providers have an extremely low cost of capital, and so they are, and there are a lot of them, and there are not many projects for them invested, and especially projects in good locations on a relative fast track to production. So there's a keen interest in what we can potentially do. I'm not saying we're going to do a royalty or a stream or an offtake, but we'll look at those alternatives in the context of the overall financing package. And we'll look at debt, traditional debt, project finance. We'll look at converts. We'll look at all these different pieces and the equity that goes with it. And how that works out to minimize the overall cost of the financing package.
over the conversations that we've had over the last probably about a year or something like that, maybe even more now, we've talked about warrants as well through the different financing. So what I wrote down in my notes is just warrants, triple question mark. Do you think you still have to do warrants with your next financing?
We haven't done them lately. I think this is the kind of market where an issuer like Revival Gold has a bit more flexibility around how we structure our equity financings. Obviously, we want to minimize dilution for shareholders. The benefit of warrants is one can sell volatility. So there's an interesting market dynamic to having warrants or converts as a security that an investor can trade. Helps build liquidity, and it's a way of monetizing volatility. But we'll look at it in the context of, first and foremost, we'll look at price. Second, we'll look at quality of investor. And then we'll look at bells and whistles, to build the best package possible.
Yeah. Enough technicalities. Let's do talk specifics. Going back to all the drilling you did in 2025, because again we haven't spoken since this summer. What were you buying with those meters? Was it mostly confidence through infill, or was it mostly optionality through step out?
So there's a little bit of both, but the emphasis was definitely on infill drilling, which reduces the risk, moves inferred material into measured and indicated, and will allow us to maximize the amount of material that's in our PFS coming up. So that was the primary objective, and sort of as we do that, we build confidence around the geological model. As we're doing our logging, we'll see, how the lithological units line up, and we'll improve on our geological and our metallurgical model. So that's very important. The assays, and I spoke to the fact that we're seeing assay results that are coming in line with our resource grade. In fact, most of our higher grades are in the south part of the project, and we haven't released any results from that project area yet. So I would expect to see things move up from where we've been so far. But even as it stands now, we're running about 10% over resource grade, which is positive. And then there's the metallurgical aspects. And so we're doing cyanide soluble tests for every assay that we take, fire assay that we take. We also do a cyanide soluble, and that tells us something about the metallurgy.
I do have a note on metallurgy as well. We'll get to that. But out of the 12,000 meters that you're drilling now, or that you've announced now, how much of that is going to be step out versus infill?
Most of it will be infill. But what we've done with the programs in the past, and what we'll do with this program, is to give the geologists license to take the drilling deeper or step out, even as the program is underway, where they see opportunity to identify new exploration targets. And I'll give you an example of this. Just last month, we released results in the Rover area. The northwest part of Rover, we stepped out about 150 meters from the project area. We intercepted over 1 gram per ton gold out of the pit shell. That's clearly an opportunity for us to continue to grow the deposit. Likewise, we've seen opportunities in the east wall, the east pit wall, for the mineralization to extend further to the east. And so we'll continue to advance those opportunities. We haven't done any of the really new exploration that we see on the West Mercur side of the project, and we won't be doing any of that immediately this year. But this is the opportunity on having an 18,000 acre land position and an anticline which has basically the mirror image of the structural environment on the west side that we have on the east. So we will get to those things. Job one, though, is to bring the 1.4 million ounces that we have to a PFS. We'll try to maximize the amount of material that goes into that PFS, get it into production. If you think about it, in today's gold prices, this asset can generate something like $350 million a year of free cash flow. And that's cash flow that we can reinvest in all of that exploration, which is costly and dear to us to do today because it means dilution. Tomorrow we'll be able to fund that a lot more readily. So if you think about the balance of where we want to spend money today, it's on moving to free cash flow, and then that'll open up our exploration. And if we've done our jobs properly, along the way, we'll have identified those places that make sense for exploration. Going back to the earlier point, we don't want to be caught without those opportunities at least identified so that investors can see the potential in the deposit. And so you'll see that that's part of our drilling, to show places where there's depth potential. Remember, all of the drilling we've done in this program for 2025 that we've been releasing results from is within 100 meters of surface. So there's opportunity at depth, there's opportunity in the north, there's opportunity in the south, the east, and we have yet to release drill holes from the south, and I'm really excited and keen to see where that takes us as well.
Is that where you think the growth is going to come from? Because what I'm hearing here really is that name of the game right now is more preservation of ounces as you move through the categories on the NI 43-101, as opposed to growing those ounces.
Yeah, it's a little bit of both. Definitely the emphasis is on the first category of drilling. But it's a little bit of both. And look, this project is going to be, it's been producing silver and gold for over 175 years. So I think it's fair to say that we'll be many, many decades of mining to come.
How are you treating that? I mean, topography, historic disturbances, everything else that's happened in the region, how are you treating that within the resource?
In the sense of opportunities for future exploration?
Both. So as well as upside as well as the downside. I mean, what are the challenges of having that there in the first place?
We don't have many challenges around it. It actually works out to our favor that we've got so much infrastructure available to us. In fact, one of the programs that we've got underway with is to refurbish the wells that Barrick built for the project, and that work has gone well. No pun intended. So there's that. We've got the roads into the project, paved roads. We got a power line to site that's an energized power line. Those are big deals, right? Just to digress, energy in the U.S. is a big bottleneck to industrialization, and when you've got an existing power line and an energized power line at that, that's a huge advantage for the project. So I would see these things as assets. And yes, we do have an obligation to make sure we look after the site, and we pick up those responsibilities from Barrick with the close of our transaction to purchase approximately 1,000 hectares from Barrick. But it's not an onerous ask. The big benefit of this project position is that there's no water. We don't have any surficial water. We don't have any groundwater, and it's usually the water that creates challenges for mining projects because of course metals get into water and one has to treat those discharges of water or find another solution.
Yeah, I like how you made yourself laugh with that well joke. I do that as well. I like laughing with my own jokes. Somebody has to. From the step outs though, Hugh, is all of that going to make it into the PFS, like the South Zone that you're talking about, or is that too early?
We have the PEA includes the South Zone, and I think we'll bring the South Zone into the PFS as well.
Yeah. But the other step outs that you've done, which you said you haven't done all that much of, but you've done some. Is some of that going to make it into the PFS?
We'll see. I wouldn't count on it. The PFS is really focused on how do we get to that $350 million a year free cash flow. We've already got 10 years of mine life. Right? I'm not really that concerned right now about the 11th and 12th year.
What are you guiding, or what would you consider success for the PFS at Mercur, maybe from the perspective of your big four, so NPV, IRR, LOM, capex? PEA had about $750 million of NPV at $3,000 gold. 56% after-tax IRR,
and it'll work out to less than a 1 year, 1.5 year payback. So I think that's a great starting point. We'll see where the PFS takes us. Generally the PEA has got a lot of details to be ironed out as part of the PFS and the FS process. It'll be the same with this project. There'll be some pluses, there'll be some minuses. Certainly, costs are going up in the U.S. Fortunately, we're not seeing big inflation in energy prices, and that's a big component of any mining project, especially an open pit mining project. And so that's not as big an issue as we've seen in past increases in the price of gold. Usually we've seen energy prices go up as well. Labor is going to be an issue. But again, here we're advantaged because we're located about half an hour from a town of 30,000 people, and these jobs will be welcome. And there's no requirement for a camp, a fly-in situation. And when you have a fly-in camp type situation, your costs compound. Labor costs compound because you've got all of the support that's required to house that labor, feed that labor, transport that labor. And when you're in a situation like we're in, it makes for a less burdensome, burdensome cost impact when you've got escalating labor costs.
Yeah. So what you would consider success essentially, and I don't want to put words in your mouth, so correct me if I'm wrong, is a growing delta between NPV and capex. So although capex is probably going to go up, that's what I'm getting from you, the NPV is going to go up more. That's kind of the target. Yeah,
I mean, that's every miner's objective to increase NAV. NAV, I think, is a great distillation of value and what the ounces in the ground and all that's required to get them out of the ground are worth. If all we do is deliver the PEA NPV or even a number close to it, though, again, I'd emphasize that we have at least a 5 or 6 or 7 uplift, X uplift to get to the multiples at which our peer producers are trading.
Mm-hmm. And that still won't include the waste rock and the historic leach pads or something like that.
I'm glad you brought that up. Those are more opportunity for us, and the benefit of that waste rock and those leach pads in particular is that we've got broken rock already, so it's a matter of crushing it, putting it on a pad, and so relatively low cost for those ounces of gold that still remain. And interestingly, the drill holes that have penetrated through waste rock at Mercur run higher grade than the resource grade in situ. So there's clearly some opportunity there. It's complicated and difficult for the technical specialists to put estimates to the waste rock material. A little less complicated to do it with the leach pad material. So that's where the focus will be. And in fact, this year we're going to be doing some auger drilling into those leach pads to evaluate the potential around that.
That's what I was going to ask, is what's the timeline on that optionality there? Is that because it's not PFS, what I'm getting from here, but when could we see some value from
We'll
that?
be able to answer that question once we've put some auger drill holes into it and see what's there and what state is it in, and what is going to be required to get a firm estimate for the entire body of rock. And my hope is that we can put those things into the FS, but we've got to do the auger drilling first.
Yeah, I do have a couple of more questions on timing, so we will get to that. You mentioned metallurgy though multiple times, an important aspect for any project, definitely for you. What are you doing? What questions are you answering? What are you hoping to see?
Well, the first thing is we need to get more test work across the project area. And you recall that last year we did 5 column tests. We got recoveries in the mid 80s, and that gold came out of the rock very quickly. We got 90% of the recovery within 5 days. So that's a very quick turnaround time, which of course is beneficial to the operation. But we need to see that those results are going to be consistent across the deposit. And where we don't get consistency, which is inevitable because it's different types of rocks in different areas, we need to plan around that, organize around that. So that's the first thing we need to do, is to get geographic variability. The next thing thing we're doing is to look at the crush size and see if there's a more optimal crush size. So we did this, we collected these samples from PQ Core. That will allow us to test half-inch crush, inch crush, and inch-and-a-half crush. And it may be that there's a trade-off here where we give up a little bit of recovery, but we do less crushing. Currently a 3-stage crush to get to that half-inch that we used in the PEA, but there may be a possibility and an opportunity to do something different here. Lower costs at the expense of maybe slightly lower recoveries.
Could you be more specific on the numbers and those ranges of what you're looking for, crush size and then recovery to cost trade-offs and all that?
We haven't done the test work yet, so we'll let the engineers do the test work. We have 20 columns planned for first and second quarter results to be coming here within the next 4 or 5 months.
Yeah, and really where I'm coming from with this is, historically, I think Barrick recovered, what, like half of it, 49, 50%, something like that, if I'm not mistaken. You're assuming 75?
Yeah, a different process though. Remember, the Barrick stage was all run of mine. So the emphasis for them was on their CIL plant, which, by the way, you know, we may have a mill in our future. But the focus for us is on modern day open pit crush to heap leach. Back in the 90s, Barrick was doing CIL, POX circuit for the sulfide material that they picked up, and then run of mine heap leach. So in run of mine heap leach, you don't actually crush the rock. You just put the rock on a pad and put solution to it. So that's why there's so much opportunity in those pads, because that rock has not been crushed and much of that gold is still left there. And remember, the material that they were putting onto those pads was, again, higher grade than what we're seeing in our current resource. And so there's a lot of gold still left there, and it's already broken up. We'll have to crush it. We'll put it on the pads, but because we know from our column tests that crushed material performs so well and that the leaching process, it works quickly, that's an exciting opportunity for us around those pads.
But as a potential investor, what could I expect? Is it reasonable for me to expect 75% recoveries, or is that too high? Are you hoping for more? Yeah, what's reasonable to expect?
Well, what's reasonable to expect is what the engineers that do all the test work behind the scenes tell us is reasonable. And we're using Capex Cassidy out of Nevada. These guys are extremely experienced in open pit heap leach in the western United States. So it's not just about the grade of the material of the rock, but it also has to do with the characteristics of the rock. Are there clays in the rock? Are there deleterious materials? Are there problematic materials? And so we've got the right people to assess that and understand that. We've done test work. And we're continuing to do test work. That's why those cyanide soluble tests that we do on each assay that we take in our drill programs are so important. They tell us something about the metallurgy. And thus far, the data is supportive of what the PEA has given us at 75%. So I think investors can rely on that work. You know, PEA is still subject to all kinds of additional test work. And as we've talked about, these 20 column tests that we're doing are going to be very important. But then, you know, that's part of the de-risking process here this year. And if you think about the catalysts in front of us, not only do we have the drilling underway at Mercur and the metallurgical, but by the time we get to the end of this year, we'll have a lot of confidence in how the overall plan is coming together. We'll publish the PFS, and I think that's going to be a big milestone for us in terms of investor value and investor risk. And we haven't even talked about Beartrack Arnett yet.
Yeah, I do have it on my notes, so I hope you have some time for me. I hope you don't eat lunch here at this in Toronto. I've heard you guys don't eat lunch, so. We'll have time to talk through the rest. What about permitting. Permitting is a big part of that plan as well, and seeing that come together. What paperwork are you doing in 2026?
Yeah, it's all about baseline study preparation. So cultural baseline study work, biological baseline study work, and hydrological baseline study work. And the great thing is we've got a long history on this project. So we know that there's no experience with threatened or endangered species. So on the biology front, we're feeling very good about the work program in front of Stantec, who is our lead consultant on this work on the environmental side. And we'll actually start the raptor studies, the bird studies next month. On the cultural side, we're already underway. By cultural, what I'm talking about is certainly not the European sense of culture. We're talking about mining activity from the last 50 to 100 years and making sure that's properly recorded. That's the extent of the cultural in this area. And fortunately, again, for us, Barrick did a lot of that already. In fact, there's a small museum in the city of Tooele on the mining history. And one of the things we want to do is look to augment that and carry forward that tradition that Barrick established of showing the community how mining can be important to its future and how it's been important to its past. So we'll do those kinds of things as part of our mitigating activities. But the cultural work is already underway. We've had to do that as part of our drill permitting, and we're feeling good about our position there. The final step is hydrological. The desktop work has already started, and that's all about making sure we've got well data, that we know where the water sits in the ground. We don't have much to worry about at all, really, in terms of superficial water, snow, rain, and there is no indication that we've got any issue with water that's going to intersect with our resources. But we have to study that still, and we'll do that work this year. It looks very good. I mean, as an example, the wells that we have near the project have a water table to those wells, right? And we can see that water table is hundreds of meters below surface, and that's well below where we're going to be mining. So again, these are all positive indications of where that baseline study work is going to go this year, and we'll do the work. It's part of the process.
Mm-hmm. That those water studies or your water usage as a whole, that's not going to influence the nearby community, or what would that look like?
Nearby community is, as I said, about a half-hour, 40-minute drive away, and we are outside of their water draw area. And in fact, the work that we've done thus far on the 2 wells that Barrick created indicates that the water table hasn't moved in 30 years. So in other words, there's nobody drawing from the water table that we're using for or the water cell area that we're using for the mine.
Mm-hmm. Well, it comes down to the community and well, maybe even just the rest of the permitting. What about the questions they're asking around the heap-leach itself? I mean, heap-leach always a bit more of a touchy subject, especially in the U.S. What does that look like? What are those conversations like?
Yeah, the great thing about heap-leach is it doesn't use very much water at all. So just on that subject of water, we will use a fraction of the water that Barrick used in their operation, where they were running 2 mills and run a mine heap leach. So we're not using much water. We're not discharging much water, if any. It'll be a closed circuit for the most part. We'll have some evaporation, but that's a natural outcome. And I'll tell you what. There's experience in the state of Utah around mining. Of course, Bingham Canyon, world's largest copper gold mine, is just across the hills from us. It's a great opportunity for us to hire experienced miners who are looking for a new opportunity and a fresh start. But it's also a great precedent for our project and the things that we will be doing on the site. Breaking rock, hauling rock, pulling gold from that rock, metals from that rock, and ultimately contributing to GDP and the local economy. And so we've got some great precedents. I do not see issues around any of the things that we are doing from an environmental or community perspective. In fact, we've got a weapons destruction site that the U.S. government runs on an Army base next door to us. So I think if there's any concerns around noise, it'll be related to that. If there's any concerns about dust, it'll be from the quarries that are close to the road that dot the track between us and the town. And if there's any questions around, any of the other steps that we take to produce gold here on the site, we'll answer them, and we'll make sure people are out to site to see the nature of the work we're doing.
Mm-hmm. Your timeline still seems aggressive, might not be the right word, so I'm looking for another one, but optimistic. 2028 production decision in production by 2029. Is that only because of the current administration in the US, or is that doable irrespective of who gets office in 2028?
The short answer is it's irrespective of the federal leadership because we're in a state process. And I think the reason why it may look optimistic to some is that most of our peers, I can't think of one that isn't, are on or intersect with, in a significant way, federal lands. Mm-hmm. So there is a dependence on this FAST-41 as a means to move more quickly through permitting. And, I think it's incumbent upon my peers to make sure that they're not just doing things quickly because the Trump administration is asking for things to be done quickly, or allowing things to be done quickly, because ultimately those projects that don't do the proper work along the way are going to get caught by litigation. And so, it's really important to do good work. And I don't know that FAST-41 or any of these programs from the U.S. federal government are necessarily in and of themselves going to make a huge difference, because the companies that are in our peer set are going to do good work. They're going to have to make sure that their record of decisions are well supported and that they avoid litigation, because you don't want to get held up in court. There's no sense moving quickly through a process only to get held up in the courts. Our situation is different. We're on private ground. We work through a state process. We do have federal claims in our nexus, but we are avoiding those claims as much as we can, and to the extent we intersect with those claims, we won't have a very impactful, there won't be much of an impact on our overall permitting schedules. And that makes us different. Mm-hmm. And that's why it may seem optimistic, but it's completely in keeping with what the track record is with Dogam and the experience of our environmental permitting folks and our technical team.
I suppose that's in part the Utah advantage, which actually reminds me that you're not only working in Utah. That's what we've been talking mostly about Mercur today, but that's not everything you're doing. Of course, Beartrack or Net, you're moving forward on that. So talk to me about what you're doing there, and then I suppose more importantly, really what I'm asking about is from a capital allocations perspective, why does it make sense to do work there now while also working on the PFS? Why shouldn't all the money go toward the PFS?
It's a good question. If you think about a company and building a company, there's legs to the stool. I'll put it that way, and one of those legs is to have a production asset, or an asset that's moving to production quickly that can fuel the future growth for the company. But there are other legs to the stool, and we've got one of the most exciting exploration projects in the United States. And I can say that with confidence because, first of all, we've made a 4.6 million ounce discovery at Beartrack already at a finding cost of less than $10 an ounce relative to a gold price today at $5,000 an ounce. That's a hugely accretive exercise. Even if it costs us, $200 of capital an ounce and, another $1,500, $1,600, $1,700 an ounce, or $1,000 or $1,000 an ounce, $1,100 an ounce, it's still a very accretive process to find gold at $10 an ounce. So the project has a ton of potential around it, and what we want to be able to do is highlight the value of that. And so I think the drilling that we're doing there now with 2 drill rigs in our Joss zone could be very catalytic for the company. And it's an important step to take now as we're permitting and moving the engineering forward on Mercur, so that when we're generating cash from Mercur, we can flip the team from Mercur over to Beartrack, and we're ready to go to the next step. Now, we're already at a PFS with the open pit heap-leach sequence at Beartrack Arnett. The permitting will take longer on that project, and while we're getting ourselves sorted out for that, we'll continue to explore. We'll continue to add ounces, and I'm very excited about this drilling that the team is doing. And I want to point out that our chief geologist is no stranger to discovery, right? This is a gentleman who was part of the discovery team on the Silicon deposit that is being advanced by AngloGold. In fact, at this year's PDAC, Dan Pace and his colleagues at Renaissance, who staked the original ground for the Silicon deposit, will be celebrating with AngloGold to put some 14 million ounces to the books for their award, which is the Thayer Lindsay Award here at the PDAC this year.
Yeah.
And so this is no stranger to what it takes to make a discovery. And so we've got the right eyes and ears and geological talent on the directing the drills. And we've got super support with our general manager, Pete Blakely, who's the former general manager at the project, knows how to operate efficiently on the site. We've got some wonderful young geologists, including a Torontonian, Cam Egan, a young fellow who joined us about 5 years ago, is now leading the drill program down there with the drillers. So it's the right team, it's the right target, and boy, is it an exciting time to be drilling.
Well, you've added a second rig at Joss as well, I think, if I'm not mistaken. What's the point of that rig? Is it clarity or growth? As in, are you looking to better understand stuff like geometry and structure and everything else, or is it mostly to have better news flow and just grow the discovery?
The money's in the bank. It's not doing us much good there. Much more constructive to us to have 2 rigs on the project and move twice as fast with that program that we want to complete. It's about a 10,000 foot program this year of drilling, and
3,000 meters.
About 3,000
Okay.
meters, correct.
Yeah. Okay. Well, how much is that going to cost you? What's the budget for Beartrack or not?
We'll probably spend somewhere in the order of $3 million US in drilling and support and all of the things that are required around the project this year. If things go well and we see the kinds of results that we like, we may keep drilling and do some further work in the summer and into the fall. Watch this space.
Yeah. Sharkey, you've hit some alteration there in one of the holes. It's not Joss-like mineralization yet, though. Are you going to drop it? Or are you going to keep drilling that?
No, so the purpose of the work at Sharkey, some 2.5 kilometers south of Joss, was to demonstrate that we have structure along that corridor, and you'll remember that it's undercover. So the geologists use geophysics, they'll use soil geochem data, they'll use their instincts to be able to say, hey, I think the structure goes further south. We staked the ground. And then what we wanted to do was confirm that we actually are, seeing that same kind of alteration, that same kind of structural environment. And that's, I think, what we've got out of that one of those 3 drill holes we drilled down there in Sharkey. We'll have geochem analysis of the rock that comes from that intersection, and we'll see what it tells us. But it looks good, and it tells us that it gives us the confidence to say that we're in the right gold system, and we don't need to go back there right away. We'll continue to step south from the known mineralization. Remember, we're hitting 6, 7, 8, 10, 12, 15 meters of really interesting grades here, running up to 15 grams per ton gold. And if we can continue to do that as we step south of Joss, that can quickly add up. And remember, this is an orogenic gold system as well, and those tend to go very, very deep. Our team had the pleasure of visiting a project over in Europe that's got very similar characteristics. We were down at the 1,800 meter level. And watching that deposit continues to go deeper. Here at Beartrack Arnett, we've only drilled down about 550 meters. So lots of potential to go deeper, lots of potential to go south, and really it's just as quickly as we can get to that, the more quickly we surface that value for investors.
And the weather is better than that European asset that you probably went to see. What would you consider success, though, from this program? I mean, Jaws, Sharkey, what else are you doing, and what do you want to see? What's kind of the goal? What would success look like?
Success for us, I think, is to see that project, put another million or 2 ounces to it in the underground. We're already at about 900,000 ounces of gold in the underground of that 4.6 million ounces, and the grade there is about 4 grams. Big, thick intercepts, and in the core of the deposit, higher grades. So if we can extend that, take that deeper, show continuity, and move towards an underground target that's a couple of million ounces or more, that's a pretty tantalizing prize. And you remember, we're starting with open pit already, but if we can bolt on another 150, 200,000 ounces a year from an underground project, that's very complementary and puts us in a scale that I think, sets us apart from all the rest.
When are you going to have those answers? When do you want to have assays out of Beartrack?
Well, we'll see about the progress with the drilling, but this summer we'll have assay results out, and if all goes well, we'll certainly want to look at doing subsequent programs, and we'll need subsequent programs to get that material drilled off sufficient proximity for putting into an economic study. But gosh, I'd like to be doing that over the next couple of years. If we could put together an underground project there, that could be exciting.
Yeah. You're going to have to figure out metallurgy there as well, though. I know you're working with Dundee's GlassLock on that. Do you know something more today than what you did last time when we spoke?
We've done a lot of metallurgical test work already. That's what gives us confidence to go drill this off. 94, 95% average recoveries to the flotation con. We do look at this as a concentrate sale operation. This would be similar to a lot of different operations around the world, and the value unlocking step that comes to us from DST is a really interesting one. It's a process that's been industrialized before. It deals with arsenic in the concentrate, and it gives us the alternative to send that concentrate pretty much anywhere in the world. And the test results to date have been excellent. We will want to do more test work there, perhaps later this year with some of the core coming out of the fresh core coming out of this program. But so far so good.
Is that when you talk to Dundee, and this maybe goes all the way back to when you said you have supportive shareholders, what is Dundee supporting you for? And you and I have talked about that, but maybe that's changed with the new results. As in, are they really only in revival for GlassLock and make that happen, or are they also interested in what's happening at Mercur?
Yeah, we're a really good fit for Dundee. I mean, these are very smart people. They've been part of creating some of the more interesting and successful gold and other metals companies in the world. Kinross, Padre. You can think about the Sabina, Breakwater. So lots of past success. And I think the thing that separates Dundee apart from their other, the other investing groups, the public groups that invest in other companies, is that they have strong technical understanding and expertise. And so the short answer to your question is, I think they see potential in both our projects. I think they like the fact that we have a near-term production opportunity at Mercur from a relatively simple open pit heap leach process, but I think they also see and are uniquely positioned to see the potential around Beartrack Arnett because of their metallurgical expertise. You remember, Dundee DPM now is dealing with some very complex metallurgy out of Eastern Europe, and very successfully. And so that's the pedigree that Dundee, the investor, has in their ranks, right? And so they can uniquely see the value in both assets, and that positions them well for the early investment that they made. But I think their plans for us is to see us succeed, and when we succeed, they succeed.
So the focus seems about an 80-20 split between Mercur and Beartrack. Is that fair to say?
In terms of what?
Focus. Well, no, not spending, just the focus that you spend on it. Really where I'm going with this is thinking, is Beartrack Arnett taking 80% of your attention for 20% of the reward type of thing, because it is it's a process, right? Like every exploration process.
Yeah.
So is it taking too much of your attention away from the PFS?
Yeah. So there's no precise answer to the question, right? Of where should you be spending your time? You have to, and as we do at Revival Gold, we sit around the table and we ask ourselves, what is going to be the best value for our shareholders? And we don't know the answer to that until we've done the technical work. But so we'll look back at it and we'll say, oh, geez, we should have been drilling over here instead of drilling over there. But we'll use our best information, and you're probably right. At this stage, we're putting about 80% of our effort into Mercur and about 20% of our effort into Beartrack Arnett, but it's a portfolio approach to optimizing the value for our investors. And I can tell you, when you get to a production situation and you're generating a lot of cash, you want to have other places to spend that cash already in the company. You don't want to have to go out and buy something. And we've set up, in that sense, we've set up. It's a bit of an 8-year overnight success, right? We've set up the portfolio so that we can build a business, something that produces over 300,000 ounces a year for over 10, 15 years, something that can be in a good location, the Western United States, something that's synergistic, something that's all gold, that gives investors maximum exposure, something that has the ability to, in effect, self-finance, building in a staged approach as we move to that ambition of over 300,000 ounces a year. We're starting with 100,000 ounces, but we have the portfolio that can deliver much, much more. And for investors, it's really important today to choose something that has scope to it, something that has scale to it. It's no good to be caught in a corner, producing 20, 30, 40, 50,000 ounces a year with no vision to get to much bigger place. It's a phenomenon of the market that success begets success. And so when you ask me the question, am I worried about a $300 million market cap? Do I think we're overvalued? Oh my gosh, I think we're in the sweet spot now. Going from 300 million market cap to 3 billion market cap is the ambition here.
Yeah.
And the tougher road is to go from startup to 300 million. And I think the investors that jump on board our ship today have lower risk, better opportunity, because we're in a market that's giving us credit for what we're doing. We have the goods. We've proven that we can put that asset portfolio together, and we have the investors to take us there.
Well, I think from your answer here, my next question becomes almost self-explanatory, just listening to your sentiment, but I was wondering about bringing in a JV partner on Beartrack or Net. I mean, so that it doesn't take away from your attention and or capital. Under what condition would you consider bringing someone in?
We'll look at everything. Some have approached us about doing joint ventures. The flip side of it is when you joint venture something, you're giving up opportunity. And we see some of our peers doing joint ventures where they give up interest in their projects direct interest in their project at an early stage, and they can never get that back. Whether you're selling a royalty or a stream or a joint venture interest, it never comes back. And our preference is to keep 100% control of our assets. That gives us maximum optionality down the road. And once we've surfaced the value through exploration, development, engineering, we'll look at some of these things that are forever, like royalties, like streams, like joint ventures. But as it stands right now, we've got a healthy capital market, and there shouldn't be a reason to give up a direct interest in a project. And we're still a direct controlling interest. And we've seen some of our peers, going through the last few years, resorting to this kind of structure whereby there's an earn-in that takes a party over 51% and into control. And at that point, your hands are tied. You no longer have the optionality on your asset, and you no longer have the ability to create value from the asset that the incoming party has acquired.
Mm-hmm. Let's maybe do a bit of a summary.
That's like selling control of your company without a premium.
Yeah, exactly. At the asset level, you've seen a lot of these, especially deals that were done in the bear market, that are currently acting as a damper on the stock price for some of these companies that did those deals. So that is a fair point.
Look, you have to do what you have to do to move the projects forward. So I don't begrudge anybody. I'm just saying, if we have our choice, we'll look to financing structures that are beneficial to the incoming party, beneficial to our existing investors, and we'll weigh the alternatives. The best alternative for us, I think, is to minimize equity dilution, stay away from project dilution entirely, and build what we can by spending our dollars as efficiently as possible on things that have maximum impact.
Let's do a bit of a summary here and work toward wrapping it up of the expected catalysts, kind of a catalyst calendar, if you will. What's coming for the rest of 2026, kind of month by month, March, April, and so on.
Yeah, in the very near term, more drill results, right? We've got another 29 drill results to get out of Mercur. I think we'll see those in March, early April. We will definitely have an update on the drilling that's going on at Beartrack Arnett. I think that's a very exciting step for us. We'll have metallurgical results out of those 20 columns that we're running on Mercur, and that will come in the kind of May, June timeframe. Over the course of the next few months, we're also going to be advancing our baseline permitting work, and we'll have updates in respect of that activity, the engineering study work. There's a lot of corporate interest in what we're doing right now. I think the back half of the year is going to be interesting as we, in this gold price environment, and with the tempo that we're seeing from majors, intermediates around locking down opportunities for future growth. I think there's going to be a lot of action in the space. I've just come back from the BMO conference down in Florida, and I can tell you there's a lot of discussions going on around how do we as an industry continue to produce the gold that's being demanded, 120 million ounces a year of production, and the discovery is only running at plus or minus 20 million ounces a year. There's a big gap there, right? And companies like Revival Gold are there to fill that gap. And I think the tension and the interest around projects like ours is only going to get greater.
So were you looking forward to going from Florida to Toronto in February, or how did that go?
Yeah, well, Florida was pretty cold too this year. So and of course we're indoors all the time.
Yeah.
So no great suntan down there this time around.
But Florida cold is still not really cold. But which one of those do you see is the biggest potential risk, Hugh, of the catalyst that you talked to me about? What keeps you up at night?
Look, team is the main thing, and when you've got a busy sector and a lot going on, there's a lot of opportunities for quality technical personnel. I'm blessed to be working with some of the best in the business, and we want to make sure that we keep our team happy, engaged, well compensated, and productive.
What's been the biggest criticism that you've received from investors since we last spoke?
Well, everybody always wants to see a better share price, and I haven't heard as much concern about that lately. But that's where the rubber hits the pavement, right? CEO of any company, in a public company, the number one job is to take the share price higher. I think the great Peter Buck had observed that in the past, and I think it's very much the case that my number one job is to take the share price higher.
Yeah. I think his literal quote was that if he couldn't get the share price up, he should be shot through the head or something like that. That's Peter Monk for you. What do you pitch investors at a conference like PDAC that you have and whatever that you're going to right now? And if a new person walks in or stops by the booth, wants to talk to you, what's kind of the elevator pitch do you give them? What works the most?
We're undervalued at a time in the sector when investors have seen the gold price run, the senior gold stocks move to over 1x NAV valuations. The value, the opportunity is in the developers. especially those that are in good locations like Revival Gold that benefit from infrastructures that lowers capex and the burden of starting up again, and where risk is managed such that an investor has asymmetric opportunity. Great upside, minimal downside.
Yeah, that's as good of a point as any to end it on. What am I forgetting to ask you? What did you hope we'd talk about today that I've failed to bring up?
Well, you haven't asked me about our our great restaurants, our great nightlife scene here at.
I'm here to work. I'm here to work you.
But get out and enjoy it. It's a beautiful city, and there's a lot to do here. We got some great places, some great haunts. It's a good time to be in the city of Toronto.
Well, thank you so much for your time, and thanks for hosting us. And appreciate you doing this.
Thank you.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special or consequential or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."